Welcome to the Fear and Greed Business News Afternoon Report for Monday the 13th of November 2023. I'm Sean Aylmer. Every afternoon we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed down almost 0.5% today to 6,949 points. The energy stocks led the way lower, while the real estate investment trusts, financials and consumer discretionary stocks also underperformed. Of the 11 sub-indices, only utilities was higher. Having said that, there really weren't any big swings among the sectors. Some of the banks were lower, with ANZ off 3%. More on that in a moment. Macquarie Group was down 2.6%. National Australia Bank was up 1.6%. Santos, REA and Xero were among the worst of the large caps, while Goodman Group was among the best. In corporate news, ANZ's aggressive activity in the home mortgage market has helped the bank propel its full-year profit to 7.4%. But its profit margins are declining. Hence, investors sold off the stock. Metcash will take full control of Total Tools business, buying the 15% of the hardware chain it doesn't already own for just over $100 million. And shares in gaming group Ainsworth Game Technology jumped 13% after it confirmed media reports that it had hired Macquarie Capital to review its strategic options. Earlier, the Financial Review had reported the group was considering going private. Story number 2, Australian Super has rejected a last-minute offer to join Brookfield and EIG in their $20 billion takeover of the energy group, ensuring more nervous nights for the buyers ahead of next week's shareholder vote. AusSuper is the largest shareholder in Origin. It owns about 15%. The consortium wrote to AusSuper today, offering the option to join them as buyers of Origin in an effort to overcome the industry fund's opposition to the takeover. But AusSuper said it will vote against the takeover scheme from the Brookfield and EIG-backed consortium because it believes the ongoing energy transition has further enhanced the value of strategic energy transition platforms like Origin. The takeover bid requires 75% approval from voting Origin shareholders, a threshold that's pretty difficult when 15% is already saying no and not all shareholders will vote. Story number 3, agribusiness Elders share price jumped more than 18% today after the group outlined a 38% drop in net profit, but was very upbeat about the future. Now, a little context needed here. Last year's result was Elders' best ever, and the 12 months to September this year was the second best ever. Net profit was a bit over $100 million and lower than last year on the back of falling livestock, farm chemicals and fertiliser prices. Chief Executive Mark Allison, who has led the group for a decade, he was supposed to leave about now but has decided to stay on, said Elders isn't a one-trick pony. He said the company will continue to deliver 5 to 10% earnings growth through the agricultural cycle. Elders has 16 potential buyouts in the pipeline. It actually made 9 small acquisitions in the past 12 months. Very busy on that front. Story number 4, TPG Telecom's share price tumbled 12% today after it failed to reach an agreement with Vocus over a transaction to offload its Vision network. Discussions on the $6.3 billion sale of the fibre assets have gone on well beyond the exclusive due diligence period. Today, TPG said the proposed transaction involved considerable complexity and ultimately the parties have been unable to reach alignment on the operating model and commercial terms for TPG to have sufficient confidence that a successful transaction can be agreed and executed. However, there's plenty of discussion that the Macquarie infrastructure-backed Vocus Group will be back for another crack. Vocus wants the 27,000 kilometres of fibre to boost its broadband services. TPG wants the sale to pay down debt. And story number 5, Incitec Pivot said a buyer had completed due diligence on its fertiliser business, hinting a sale of the business is close. Incitec Pivot has been trying to split the explosives and fertiliser businesses for months. Neither are doing particularly well. The group's net profit for the 12 months to the end of September fell 57% on the back of lower revenue. Pre-tax earnings at the explosives business was down 16%, while the fertilisers business was off 75%. After the result yesterday and the announcement of the potential buyer, analysts said they're worried that the fertiliser business is being sold off at a low point in the economic cycle. Incitec's share price ended up more than 1% today. That's it for the afternoon report for Monday, the 13th of November, 2023. Michael Thompson and I will be back tomorrow morning with a Tuesday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.